Welcome to the Real Estate Show with your hosts Terry Kalakos and Chantal Desjardins, your only source for all of your real estate and mortgage questions. In this episode, Terry explains what are the acceptable income sources when applying for a home mortgage in Canada.
How does the bank decide if you earn enough to get approved for a mortgage?
Okay, so I'll do a quick little recap about, so when we're looking at credit, you have an element, you have an algorithm that's used by Equifax and TransUnion. It's called the FICO scoring system. Credit scores range from 300 to 900. You should have a credit score of around 650. The second thing that's looked at is what we talked about last week, which is your loan to value. In other words, your equity. How much loan are you taking versus the value of the house, right? When you look at those two elements by themselves, they're nothing without the third element, which is the income. Now, the income element basically has two ratios that are used. One's called the GDS ratio, the other one's called the TDS ratio. And not to get overly technical, GDS is basically your gross debt service ratio. It looks at all the debts that are specifically related to the property that you're buying. So it's going to look at your property taxes, it's going to look at your school taxes, it's going to look at your heating costs, it's going to look at your mortgage payments. And all of those, you shouldn't be exceeding 35% of your gross annual income to pay those things. Now, if your credit score is above a certain point, you're going to be allowed to go to 39% GDS. The other element that's the other ratio that's looked at in the equation is your TDS ratio. And your TDS ratio is your total debt. So that'll look at all those. So everything that we just discussed, plus your car payments, credit cards, loans, car payments, so on and so forth. So once you take all of those in there, it says you can't go over 42%. If your credit score, again, is above a certain point, usually above 680, they'll let you go to 44%. So this is an example of how the three elements will work together. If your credit score is strong, they'll cut you some slack on the ratios, on your GDS and TDS ratios. But if your credit score is weak, then it has to compensate.
Right.
So that's pretty much its summary. That's what we'll go more into detail, I guess, after the traffic break, but that's the summary of it.
Well, I'm going to think about all of the numbers that you just gave me there.
Yeah.
And in the meantime, should we check out the roads?
Yeah.
Okay, let's take it. After this, we'll dissect exactly what Terry just said when I replay the tape. For now, let's check in with Kira Yeager.
Real Estate Show on CJAD 800 with Chantal Desjardins and Terry Kalakos, president of Northeast Mortgages.
And we're back. Terry hasn't broken anything yet, but he's off to a raring start.
That actually hurts.
If you're watching us on Facebook Live right now, you'd notice he took his headphones and he smashed them into his forehead. And now we'll just carry on like it never happened. If you have questions out there in the radio land, call us 514-790-0800 or text CJD at 514-800 and we will answer them. Or you can go to Facebook and type your questions in there in the old Facebook. My mom's even tuned in right now.
Fantastic.
In Winnipeg.
Is she on Facebook Live?
She has no idea. She's like, what do I do after I go to the Google?
Oh, okay.
So it's a slow process.
We invite you to subscribe to our YouTube channel to stay on top of the latest changes in the real estate and mortgage industry. Stay informed. Subscribe to our channel today.